Hey everyone, Dave Keller here with StockCharts.com. Today on Behind the Charts, we're going to feature a wide-ranging conversation I had recently with Keith Fitz-Gerald from Money Map Press. I caught up with Keith at the Money Show in Orlando a couple months ago, and what was funny was we're actually both from the Seattle area, and we somehow traveled all the way across the country to Florida to finally meet each other, but I'm so glad we did. Our conversation hit on a number of really important topics, what I feel are very important topics for investors. For example, he particularly was talking about social mood. He said, the mood drives the markets and the markets drive the mood. And it was such a great way of thinking of the relationship of the mood of investors, how that relates to market activity, relates to prices, especially now as we're dealing with coronavirus pandemic and how that relates to investor psychology and fear. It was just such a perfect timing, and this is before all of that really was playing out here in the United States. We also hit on risk management and how important technical analysis can be for managing risk. And what's so interesting is a lot of people think of technical analysis for their long ideas, right? For the buy discipline, and not enough for the sell discipline. How can it help keep you out of some of those losing trades? He had some great thoughts along those lines. Finally, we talk about what I would call fusion analysis, relating the fundamental and the technical. And in my background, I spent a lot of time with fundamentally oriented investors, help them understand how to relate the charts, how to relate the technical back to the fundamental. And I have often found if you can relate a good fundamental discipline, understanding the companies and what's driving them, to the technical, the fear and the greed, the emotional state of investors, how that's driving stock prices, then you have a marriage of two really good well-designed discipline. So here is my very wide-ranging and I found incredibly enjoyable conversation with Keith Fitz-Gerald. Hey everyone, we're here at the Money Show in Orlando. I'm joined by Keith Fitz-Gerald. He's the Chief Investment Strategist at Money Map Press, and I find out we're actually fellow Seattle residents, actually. Seattle area, which is awesome.
Yeah, isn't that great?
I'm sorry we had to both come to Florida to sit down, but next time we'll do it in the studio in Redmond, all right?
Sounds great.
So for those that aren't familiar with you and your work at Money Map Press, can you just give us a brief background? How did you get to this point? How did you learn the craft?
Sure. Well, I started my career, I actually made my very first trades back when I was 15 years old.
Nice.
Using money I had saved up from cutting lawns.
Okay.
And so, my very first trade was IBM.
Nice.
And I remember, like most investors, having cold palms, trembling, couldn't figure out what I was doing. How did I do this? But I had a grandmother named Virginia Gruner, Mimi, we call her. And every year, instead of getting sweaters and magazines, whatever, Mimi would make sure I had a copy of Value Line and Forbes. And every Sunday,
classic reading.
Yeah,
right? That's good.
But
good.
Here's the thing:
Yep.
Mimi was widowed at a very young age.
Okay.
And she turned a small life insurance settlement into everything she needed to live, and then some, by becoming a global investor. And Mimi and I would sit down and talk money from a very early age. We'd sit down on a Sunday afternoon, have ham sandwiches, and I had to learn how to make her martinis. But the point is, we would play this game, talk about the world. And the world at that point in time was filled with very negative headlines. America was coming out of Vietnam. We had the energy crisis. We had lots of things going on with interest rates. And her point was, there's an opportunity in everything. And the world is bigger than your garage. What is it? And so that's how my mind began to function. And I went on to school at Skidmore, and I began my career at Wilshire Associates, working for a man named Dennis Tito. And Wilshire is one of the largest institutional consulting firms in the world.
Right.
But the point is, institutional thinking, models, portfolio theory, Markowitz, all of the classic stuff you need to know.
Yep.
I learned what worked and what didn't work.
Right.
And I learned very quickly, how do you identify those great companies? So long story short, all these years later, I've been Chief Investment Strategist at Money Map Press since 2007.
Okay.
We have several million readers, subscribers, and viewers to the materials we produce, the television I'm on, etc.
Right.
And it's very humbling because I didn't intend to start out that way. These people place a lot of trust in me. And so I'm a techno-fundamentalist by background. I believe that you have to have solid underpinnings, a clear path to profits. You have to be in line with major unstoppable trends. Anything else is a risk you don't need and you don't want in your portfolio.
There are so many little comments you made that I would love to dig into.
Sure.
The first thing you talked about when you started, what year was it when you first really started paying attention to the financial markets?
Late 70s, 79, 80.
So you're coming out of a pretty tough time for a lot of reasons. Then you're right at the 82, 83 when Dow broke 1,000.
That's right.
What was that like in your formative years, seeing a secular bear transition into a secular bull? That's kind of an unusual period, right?
Well, it was the first time in my life that I became aware that there are very real consequences to economics. fundamentals.
Okay.
And so now I believe that social mood drives the markets drive mood, right?
Okay.
And so in that regard, there's a very real connection. And I saw it very personally because I was invested in it.
Yeah.
That was my lawn money.
That's right. You had skin in the game there, right?
Yeah. At a very young age, I was using that to pay for college board. I was using it to pay for my apartment. I was using it to pay for the fun I had with my friends.
Right.
So, I blew a lot of trades. I messed up on a lot of stuff. But I figured out that information matters, fundamentals matter, path to profits matter. And so now today, all these years later, again, I use a combination. I start with the fundamentals. I look for those. I want defendable margins, clear products, global brands. I want money coming in because that automatically gives me an advantage. Rising tide raises all boats. And then I use the technical analysis to figure out when to make my move.
So you mentioned technical analysis a couple of times. Can you talk a little bit about the technical portion of your toolkit? How did you learn about technical analysis in particular, and how would you describe your toolkit now?
Well, I learned about technical analysis the same way I learned about fundamental analysis. I made a lot of mistakes.
There's carnage in that learning process, right? Okay. Yeah.
I used to joke all the time. I'm in charge of my own bankruptcy. You learn by making mistakes, right?
Of course.
And one of the things that Mimi drove into my head at a very young age was you can't understand risk if you don't take it.
Well, that's very, very good.
Okay?
I love it. Yep.
Now, that's the difference between taking a flyer and taking controlled risk.
Yeah.
So everything I recommend, every piece of research I produce, everything I write is a very carefully crafted blend of here's the opportunity, here's how we need to get after it, and here's the risks involved in taking it.
Now, you mentioned risk a couple times, which is fantastic. How do you think about, I think a lot of people think about technical analysis and they focus on getting the next home run, right? What's the next stock that's going to double or real quick, triple? How do you think about technical analysis in terms of risk management? How do those two relate for you?
Well, they're critical because the big aha for me, right, is most people think that professional traders wake up in the morning and think about how many gazillion dollars they can make that day. That's not true. Right. The big aha moment for me was when I realized that the world's best traders wake up in the morning and they think, what's going to cause me to lose money?
Yes.
And can I avoid it?
Okay, right.
So risk management is not optional, especially in today's markets. You've got to do it all the time. So when I talk about risk, it's not a flyer. It's can I calculate it? Can I understand it? Can I get to the point where it's comfortable that I can actually make that investment and I know reasonably what the outcome is. Now, I mean, there are days where I blow it. There's days where the market has other ideas. I still screw up a lot. But the point is you can't understand risk if you don't take it.
I like that, and you talk about risk management. You're actually managing the risk, which is key, right?
Because again, sort of a little Keithism is if you manage the risk, the returns will come.
I love it.
Not the other way around. Everybody's like, oh, I want to hit the home run. Well, people don't understand, but Babe Ruth was the strikeout king in his day. Not many people know that.
That's right. You don't think of him that way.
They're like,
though, right?
what? He's one of the greatest home run hitters of all time. But in his day, he was the greatest strikeout of his time. So, if I lose a lot, fine. If I lose a lot, fine. As long as I'm winning more than I'm losing, you know what? From a trading perspective, that's great. From an investing perspective, as long as I can stay in the game, it's always better to play offense than defense.
I love it. And you mentioned something about models. I'd love to know, how do you think of more qualitative forms of analysis versus quantitative? Do you incorporate any sort of models, any sort of quantitative models, or is it purely discretionary based on patterns and themes that you're seeing? How do you relate the two?
One of the things I learned at Wilshire is that rules-based approach to everything works.
Okay.
And if you get off the rules, that's when you have the problems. So my models, I'm actually doing some really cool work in artificial intelligence right now. In nonlinear pattern recognition. There's some things that, I mean, when I was in high school, I was king of the propeller heads. So I suppose I still am.
And now it's work.
And now I just do it for a living.
Yeah, good for you.
There's a mix. There's a very real mix between quantitative and qualitative. I think you can't have one without the other.
Right.
I don't believe in purely fundamental, purely technical analysis. I think there's a blend. And again, to me, if the right fundamentals are there, the technicals will make sense. Where people get into trouble is if they have a hammer, they think everything's a nail. And that's not the thing. You can't do that. Not in the markets, not in life. And so again, my approach is very simple. There's 6 unstoppable trends.
Okay.
And more money has been made in all of history on those 6 trends than anything else. And if you go down within those 6 trends, you've got must-have products and nice-to-have products. Must-have products are things the world cannot live without. Nice to have products are a risk you don't want.
Yep.
And so, great example, Apple makes must-have products.
Sure.
The world cannot function without Apple as we know it.
Right.
But you know what? The world can function without Uber. They may not like it, but they can. See my point?
I love it. I love the differentiation
Yeah,
there.
and then you can come into risk management after that. Because again, people say, well, what if the market reverses?
Yeah.
So what? That's what risk management is.
Sure. So you really shouldn't have to worry as much about that, right? Because you've got it covered.
If you're managing your risk before you make the investments,
that is such a great point.
You don't have to worry about
it. Yes. The time to figure out the exit strategy is at the entrance, not when things start getting crazy, right?
You want to know where the parachute is before you get on the plane, not after somebody goes, oh,
I love it.
You know, the plane's going down.
Yeah. So you seem in good spirits. Can we pivot and tell me a little bit maybe about an example of where you mentioned learning from mistakes. Can you tell us about one example in a little detail? Where was a time when you messed up or when a trade went against you, or what were one of those early learning experiences that helped you learn and develop your toolkit?
Well, I mean, let's take a current one. I mean, never mind the old stuff.
I mean,
You know, we used to work with Tesla a lot.
Okay.
I mean, I love that stock. It was very interesting.
Yep.
But Tesla transitioned from where it was an investment to becoming a wild speculation.
That's right.
I mean, Elon Musk is probably, I would submit, the most intelligent, articulate, forward-thinking executive on the planet today.
Okay.
His stock, on the other hand, I mean, he is the Pied Piper of propaganda. And it is amazing what's happening to that stock.
Right.
But the very action that's in that stock makes it untradeable for me.
Okay, right.
You know, so we've tried that. You can't go long it, you can't go short it.
Yes.
You know, it doesn't matter. You can't win for losing with that stock. So the mistake is one I don't want to make. The mistake is trying to go long on a stock that I think is going to fall, or trying to go. Every time I make an argument, it's going to go up, it's going to go down. Every time it goes down, it goes up. I mean, you know what I'm saying? It's one of those things like it's a stock that's very, very hard to win. It's a hold on for dear life situation.
That's right.
Which doesn't fit for me.
Okay.
And so anytime I have ever entered a trade where I have violated that rule and I've not thought about risk first, I've gotten stung.
Got it. So if we could pivot a little bit, you mentioned before we started shooting, you split time between Washington State and Japan.
That's right.
And you've mentioned sort of a global, thinking globally about your investments. We're in the situation where the U.S. has outperformed global stocks for a number of years now. And the trend at this point, early 2020, continues to go. How do you think about a global asset allocation versus the U.S.? How do you think about U.S. versus non-U.S. and where do you see that headed during the course of the year?
Well, so, if you look at debt, you look at politics, you look at all these other things, the United States is the best looking horse in the glue factory. Okay? That's just the way it is.
Yeah, right.
Now, on the other hand, the world looks at us, and a lot of people hate our guts, but they love our dollar. So technically, fundamentally, what that says is that people are attracted to strong economy, they're attracted to good wealth, they're attracted to money. So before you even get into the idea of, is this good, is this bad?
Right.
What you do is, where's the money going? Well, it's all coming here.
Yep.
So if that's the argument, then you can, from an investment standpoint, say, what are my top trends? Well, the big FANG stocks are great because they can add a code, change a line, add $1 billion to the top, and everybody else in the world has to have them.
That's right.
So I'm not so concerned about, am I in China, am I in Indonesia, am I in Africa, am I in England? The biggest brands in the world have already figured that out. They've already made that allocation decision.
That's right.
If I can track their profits, I don't have to worry about all of this stuff at that level. Does that make sense?
That makes a ton of sense.
So let the CEOs who really know what the hell they're doing figure that out, because they're smarter than I am.
So what you mentioned a couple times, what I would call fusion analysis, sort of combining fundamental and technical theories, which I think is most institutional investors that I've worked with that really get it done, do that same idea. What can you talk about what you do when those methods disagree? What happens when the fundamentals tell you one thing, the technicals tell you something different? How do you reconcile that?
I don't. That's an interesting question. Nobody's really framed it that way.
Sure.
I don't know. There's no one answer, but what there is years of reflexes that if you get that sort of nagging feeling that something's not right.
Right.
When I was young, I would push through that and I'd get stung. But now that I'm older, not necessarily wiser, if I get kind of that gnawing in my stomach, or I get that sort of back of the head, something's not right.
A little sixth sense of
something is like, I'd rather miss the opportunity than take the risk.
Oh, that's good. There's an aviation term. They always say it's better to be on the ground wishing you were in the air than in the air wishing you were on the ground. That's exactly what you kind of described. For someone just getting started, a newer investor that's just trying to understand all of these toolkits, what would you tell them, or what would you tell a younger you trying to get to your point? How would they learn about this craft, do you think?
Well, I would tell them the same thing that Mimi told me.
Okay.
Two things. The world is bigger than your garage. So get out there and look at it, because you got to find the opportunity. And
Sure.
there is opportunity in everything. I'm driven by sort of three things. You want to invest in optimism.
That's
because
good.
Pessimists never make money. It's just a dawn of time. They have never made money. Optimists, on
Right.
the other hand, have made gobs of money. And if the other thing is, you can't make money unless you're prepared to take risk.
Yeah.
Now, how you quantify risk is up to you. I don't know that. It's different for every single person.
Yeah.
So if I were to look back at my younger self, I would say, okay, Junior, learn to take risk earlier. Make sure they're intelligent risks. But also continue to focus on opportunity, because if you can be more aggressive with it, your money is going to work hard for you. People want to spend it, but what they don't understand is that if you leave it alone, it's going to take care of you. And that's a very different perspective.
Keith, this was fantastic. This was such a pleasure to learn a
You're
little bit
very
about
kind.
you
Thank
and what you do. And to have a safe trip home to Seattle, all right?
Thank you. Well, I'll see you in the neighborhood.
I will see you around. This is Keith Fitz-Gerald. He's the Chief Investment Strategist at Money Map Press.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.